Hello everybody, it's Stephen again, and I'm here today to provide you a video to explain what happened last week in the markets and tell you how our portfolio fared. So last week was a bit of a difficult week in the market again as a whole. The week actually started off pretty well, but as the week progressed, on Thursday there was actually an increase again in the bond yields. And what actually happened with that was that actually caused the growth stocks and technology stocks to actually sell off again. And this has been a kind of a common trend over the last month or so. So the Nasdaq kind of suffered again, kind of later in the week last week, which caused the Nasdaq to be down as a whole for the actual month. Our portfolio actually fared pretty well. And the reason for that was that we had a lot of uncorrelated assets to growth stocks. So although we do hold some growth stocks in our portfolio, we also have some stocks that actually benefit from higher interest rates, such as financial services and insurance companies. We also have some COVID recovery stocks as well in our portfolio, as well as cryptocurrency, gold, and other type of hedges. So our portfolio actually held up, and it actually did better than the Nasdaq last week. So we are still in profit for the month, which I see as a huge achievement, especially during these sensitive times. So we are continuing to see that rotation from growth stocks into value stocks. But I'm not too worried again about growth stocks in the long term, because I think what will happen over time is that the markets will become a little bit more desensitized to these bond yields as time goes on. So, don't be too worried. We also have a very diversified portfolio and we'll be able to ride a number of different scenarios. So what happened again in the market? Some other key events that happened last week. Well, President Biden actually announced that they're planning to vaccinate over 200 million Americans in the first 100 days of his presidency. This has actually been revised up from the 100 million vaccinations he actually said a while back. So they are increasing the vaccination program in the US, and this can only be good news for the market as a whole. In contrary to that, we're also seeing some issues in Europe. So Europe has been a little bit slow with conducting the vaccination programs, especially in Germany and France. And we've actually seen increased spikes in the number of cases in those two countries as an example, and a slowdown in the speed of the vaccination programs. So they have recently announced this week that there is going to be fresh and extended lockdowns in France and in Germany, and this could go all the way up to kind of mid-April and beyond into May. And this could cause a few issues in the European markets. But the UK have done very well in terms of the vaccination programs. But this has caused a little bit of a spat between the European Commission and the UK, because the European Commission have been saying that the UK have been getting all the different drugs from the pharmaceutical companies. And much more than they have been in Europe. However, there was a joint statement this week by the European Commission and the UK, which said that they're going to work together to make sure as many people are vaccinated as possible. So we are seeing some touches of optimism in the way that COVID's being handled, and some areas of the world where it's not quite going to plan. So I think over the next couple of months is going to be critical to many of the economies reopening. And it's very important that although every country has its own goals in mind, that they work together to ensure as many people are vaccinated as possible, because at the end of the day, we want the different countries to be able to travel between each other and conduct business. So I think this is very important to the markets moving forward. Another big piece of news that we had this week in the markets was the new Suez Canal. So there was actually a cargo ship called the Ever Given, which actually got lodged in the Suez Canal and actually got stuck because of high winds, and they were unable to steer properly. So this has actually caused a huge amount of problems. There was already some kind of slowdowns in the way that goods were actually transported around the world, but this Ever Given incident has actually further intensified that. And the Suez Canal is actually responsible for not only shipping oil around the world, but also shipping other really important goods and products, as well as other kind of commodities such as wheat, coffee, and many other things. So this has actually caused a huge snarl up and a huge backlog of ships that are unable to get to their destinations. So that's a lot of those have actually been delayed. It will also cause quite a lot of those to have to take an alternate route around Africa, which is going to take many more days and actually cause a delay in a lot of the in oil, but also in a lot of different goods and services. So that's something to watch. But we've seen an increase in the oil prices because of this incident, which is, on Sunday, still yet to be solved after it happened on, I believe, Wednesday. So it depends how quickly this issue is resolved, but it has caused an increase in the oil price. We've actually, in our portfolio, we benefited from that quite well because we have Chevron in our portfolio, which has done quite well this week, as well as Calumet products, which is a company that's actually done really well in my portfolio the last couple of months, and I'm expecting that to continue to do well. But I think one of the things we need to see is how long that this incident is going to last for. But I expect oil to actually do very well anyway over the kind of next 6 months, especially as we start to see some inflation and also we start to see some weakness in the dollar. So our top 5 performing stocks of the week was, in first place was actually Calumet. Calumet, again, as I mentioned, actually benefited from the Suez Canal incident and the rise in oil. So that's actually done really well at 12% this week. In second place is actually a UK company called Micro Focus, and they've actually released a new product this week called Optic, which received a lot of optimism in the market. So that's done very well at over 9% rise. In third place this week was a company called Waste Management. Again, this is a company that does well in a lot of different market scenarios. We always require waste management, and actually they do benefit as the economy starts to improve, because there's more need for industrial waste management. So they've done very well at a 6.77% rise this week. In fourth place was Chevron. I don't need to go too much into that. You know why that's increased this week. Again, to do with the oil prices, to do with the Suez Canal incident, at 3.97% rise this week. And in fifth place was BlackRock. BlackRock, again, is a financial company, and they've also done very well in terms of this rotation into value stocks or into companies which actually benefit from increased interest rates. So those were the top 5 risers of this week. A bit of an overview about what happened in the crypto markets last week. So the week actually started off reasonably well, and we were sitting at about $58,000 a Bitcoin. But what actually happened as the week progressed was on Friday there was the Bitcoin options expiry. This is an event that happens on a very regular basis, but what we tend to see, especially after something's been rising so much, is that we see that a day or two before the Bitcoin options expiring, we sometimes see a sell-off. And that is what seems to have happened on this occasion. However, I don't think that this is a particularly negative thing, because as I said, it happens very regularly. And what we have seen before in the past with these Bitcoin option sell-offs, that after they happen, we tend to see a rise again in the Bitcoin price as people kind of load up and kind of prepare for the next leg up. Another reason why I think that we had a dip as well is that there was some new regulations that have been administered in South Korea, in which there's kind of penalties towards companies that don't adhere to anti-money laundering regulations. So that many of the crypto companies in South Korea have until September to adhere to these rules. I think regulation, in my opinion, is generally a good thing. It legitimizes the industry, and I think it may have caused a bit of fear in the market and a bit of sell-off in Asia, but I don't expect that to be significant moving forward. But you also need to remember that we saw a lot of good news in the crypto and in the Bitcoin space. One of the pieces of good news, which I think was actually the best news of the week, was that Fidelity and Goldman Sachs have actually filed for a Bitcoin ETF. I think this adds some more big names into companies that have actually filed for an ETF. I know that VanEck have actually filed for an ETF a long time ago, but I think the more companies, large institutions that actually file for these ETFs, I think the larger our opportunity and our chances are of one being approved. So that's extremely good news. We also saw Avanti, which is a crypto bank, actually raise a lot of capital. I think that this is again good news as we see kind of more banks that are orientated specifically to crypto. I think that can only be good for the industry as a whole. And we also saw a New Zealand pension fund called Kiwi Saver, who have actually allocated 5% of the pension fund to Bitcoin. So again, this legitimizes Bitcoin in the financial institution realm, and especially with pensions who are, historically very conservative. So I think over time we're going to see more and more pensions actually allocate a small amount of their capital into Bitcoin. We have also deployed some hedges last week, which I think helped us to weather the storm in the markets and helped us perform pretty well. We have a continued VIX hedge, which is a volatility hedge, which kind of stops and reduces some of our drawdowns in tough times. I've also strategically been placing on an occasion where I think that the technology stocks may suffer, again because of interest rates or other things. I have been placing strategic Nasdaq shorts, which I only do for a short period of time, again to reduce the volatility in our portfolio. They have served us pretty well as some of our other precious metal hedges that we have in our portfolio. I also have some available funds in my available balance, which I like to use in times where the market is potentially weak and I can seize upon future opportunities. putting me from a position of weakness into a position of strength. But also you need to know that having available balance and having unallocated funds actually helps protect me in some scenarios like we had last week, where the indexes were down and where other PIs, a lot of them, lost money in the market. I think by me having these funds available to use when I think the right opportunities arise, this actually is a very powerful tool for me. And what I really ask for you as copiers is that you believe in me and you believe in my strategy, and that you trust that I'm going to allocate the funds when I feel like it is the correct time to do so. So please bear with me. A lot of those allocated funds will gradually be deployed into the market where I see fit. All in all, it's been not a bad week considering what happened in the market. I'm actually very pleased that we've managed to keep our portfolio in the green for March. I think we're currently sitting at just over 5%, which is a really great result when we consider how the indexes have done, and also if you compare that against other PIs on the Etoro Popular Investor Program. So I'm all in all very pleased with that. Although I understand that when the markets are tough like they were last week, it's very difficult for your emotions, especially for those that are quite new in the market. But I think it's very important that you keep some perspective. The markets usually do very well in the long term, and if you're struggling to control your emotions on the red days, sometimes it's best just to switch off, take a mental break, and then come back to the markets fresh. And I know that during these tough times that you may have a lot of questions, so feel free to ask me any questions that you may have along the way. But my important message is to stay patient. So thank you very much for listening to this video. I'll come back to you again next week with a monthly wrap up for March. But thanks for listening, and have a good week in the markets, and thank you very much.